Hey, what's going on, everybody? So, thank you for showing up for this web class. The purpose of this is to really help you grow your business and avoid any mistakes that most people that are in this space make. So, let me tell you, I have a ton of clients that have been able to double, triple, even quadruple their business. One went from when he met me owning probably 20 trucks to now having over 50 trucks. He was doing about 150,000 in revenue, and now he's doing 1 million in revenue. And it all boils down to essentially the same challenges that logistics companies face. So let's go into this, and I hope that you learn something. And at any time you guys have questions, feel free to DM me or email me to go through everything. So let's go through the top challenges that logistics companies face. Right. One, constantly waiting for invoices to be paid. All right. Typically, you guys can wait 30, 45, 60, up to 90 days. I mean, 90 days is kind of rare, but it's still there on when you get paid for your invoices. Another one is, it's hard to purchase enough trucks and trailers to capitalize on the opportunities fast enough. Right. Next is finding and keeping good drivers. And then last is insurance costs and truck maintenance. Okay. These are all things that can get in your way and stop you from growing and scaling your business to where you want it to be. So let's talk about this. Waiting 30 plus days for payment. All right. It's hard to scale and take on new jobs when, you have to cover the drivers, fuel costs, and everything else. And you've completed the work, or your team or your company's completed the work, and you're waiting to get paid. All right. So this forces business owners to save up funds to bring on new clients. Okay, and certainly slows down buying new trucks. Right, if you're constantly waiting, it slows down your cash flow, and the way to scale is to buy more trucks, take on more jobs, and speed up your cash flows. All right, and challenges occur when owners have to dip into your savings to make repairs. All right, and this will delay future growth because you're depleting your savings, right? There's other ways to do this. There's other ways to speed up your receivables, right? Another problem is purchasing trucks. The more trucks you're running, the more jobs you can take on, the more money you're going to make, all right? So the owners that can scale are the owners that can add to their fleet quicker, all right? So cash is king. It doesn't make sense to purchase trucks using your cash. You want to finance these trucks. All right. And sometimes dealers may offer you financing terms, but they might not be ideal. Two, you might have to put a lot of money down. And three, maybe you just don't qualify for whatever reason. And that certainly happens. Okay. Like I said earlier, the more trucks you have, the more cash you can inject into the business, and the more profits you guys can make. All right. And then let's talk about finding and keeping good drivers. The strength of any company lies within its team. Right? The more drivers you have and the more competent and safe drivers you have, the better off you're going to be, and the more jobs you're going to be able to take on. Uh, Competition for good drivers is fierce. You can't grow and scale without bringing on the right people. These are things that you already know, but we're going to go into how to solve them, right? And then, you got to think about this. If everybody's competing for the same drivers, right, and there's less and less drivers, you have to find a way to bring them on. Some things you can do is bring them on with sign-on bonuses. Okay, and you can do that. You can bring them on with a little bit of an upfront cash, and then for hitting certain milestones. Reliable runs, time on the job, things of that nature. Next, let's talk about insurance premiums and truck maintenance. Insurance and fuel are one of the biggest costs that logistics companies have to bear. Okay, sometimes if you pay your insurance up front for the year, you can receive a substantial discount. And then, the other thing is, truck repairs. How many times does a truck go down? And now, not only are you losing that revenue from that truck, you have to come out of pocket to repair that truck. Okay, so let's talk about the solutions to each one of these problems, because this is really what's holding you back from scaling your business the way you need it scaled. Okay, I'm going to break down a solution for each challenge you guys are facing. Okay, Pay close attention, because this is what's going to be the difference between you scaling and not scaling. All right. First, when you're waiting on payments for 30 plus days, I would look into invoice factoring. Okay, this is something that we offer, and it helps a lot of our clients grow and scale their business. Okay, this program allows you to submit your invoices right away and get paid for the work within 24 hours. Okay, what this is going to do is it's going to increase your company's money flow, and it allows you to bring on new customers quicker and easier, right? Because if you're already paid up front for the work that you're doing, well, now you can go out and source more work. Okay, let's talk a little bit about how invoice factoring works. Invoices are submitted to the underwriter, which sign off on what can get approved. All right, typically what they're going to do is they're going to advance you anywhere from 85 to 95% of the job. That's called the advance rate. Okay, so they're going to pay you, if it's a $100,000 job, they're going to pay you between 85,000 and 95,000 for that invoice today. Right? Typically, companies can charge anywhere between 1% and 3% as a fee. Okay, and meanwhile, you keep anywhere from 97 and 99% of the invoice. Okay, once the invoice is paid, the remaining funds are released. So, in this example, let's just say it's on the high end and it's 3%, and you submitted that $100,000 invoice. What's going to happen is they're going to advance you, call it 90%. Okay, so you get $90,000, and next, once that is paid, okay, you're going to get the difference. You're going to get that 7%, and the factoring company, the underwriter, would keep 3%. Now, that's a high example, but I rather quote you high, and I rather under promise and over deliver when we discuss these solutions. All right, what are the benefits of invoice factoring? Well, one, it's going to dramatically increase the speed in which you receive your invoices or your receivables. It's not going to be based on your credit. Okay, so what that means is it's based on your client's credit and their business credit, more to the line. So you can have bad credit in this program and still utilize it. All right, it's going to be based on, like I said, their pay history. All right, it's a quick and easy process, and it's a long-term solution, meaning all the clients that I put into this program, they stay in that program. There's a reason they stay in that program. Okay, the program consistently will help them fuel and fund more work. All right, let's talk about what's needed to apply. You just need a one-page application, your articles of incorporation, insurance binders, what we call an AR report or accounts receivable report, and like a sample invoice. All right, so here's some frequently asked questions that we receive on invoice factoring. How long does the process take? It usually takes 3 to 5 business days to set up. Once it's set up and established, it's basically 24-hour funding, meaning you submit the invoice, they sign off on it, the money's in your account the next day. A question that we have all the time is, can we beat the rates of your current factor? Absolutely we can. If this is something you're looking to do, besides submitting everything that we need for the approval process, send us a copy of your current factoring agreement, and we'll make sure we beat it. It's pretty simple, straightforward. All right. Now, the next challenge that we were discussing is, how can you purchase trucks and trailers faster? Okay. The key to growth in this space is always expanding your fleet. Okay. So the way we offer this solution is through equipment financing. Okay. We purchase the vehicle and the trailer for you, and then we finance it over 2 to 5 years. Okay. What this does is it preserves your cash flow and allows you to grow the fleet much faster. So how does equipment financing work? Okay, it's just like buying a car when you go to the dealership, except, we're going to be going off your personal credit, the piece of equipment you're acquiring, and the strength of the business. Okay, our underwriter will analyze your company, the truck and the trailer, and then they will give us a pre-approval. Now, what I've seen is, stick with newer equipment. They don't, equipment finance companies can finance new and used vehicles, but they don't want to finance anything that's over, let's just say, 9 years old or 10 years old. just has a higher risk of breaking down. Okay, let's talk about some of the benefits of equipment financing. So it can help build your business credit. It allows you to purchase trucks and trailers without depleting the company's cash. Okay, it gives business owners the ability to expand their fleet at a much faster rate. Okay, allowing you to buy more trucks and trailers. You can buy both new and used trucks and trailers this way. All right, and again, the more trucks you have on the road, the more money your company is going to make. So, what's needed to apply? It's pretty simple. We just need a one-page application, the last 6 months of business bank statements, a driver's license, a voided check, invoices for all equipment that you want to purchase. Okay, so if it's just a truck, that's great. If it's a truck and trailer, or if it's just a trailer, we need that invoice. And if you have it, the most recent business tax return. All right. Now, a few questions we're always asked for equipment financing. How long does it take? The whole process can be done in 1 to 5 business days. All right. What are the credit requirements? Typically, 650 FICO or better, and have a decent business credit score. Now, you won't know that up front, but we'll review that, and I'll get back to you. And if it is weak or if you have a low business score, we also have credit repair that can help you build your business credit and fix any issues you might have. We're always asked, are the rates competitive? They're very competitive. They're in line with any dealership that you would go to, and sometimes a lot of times we actually beat the dealership. All right, and we're always asked, can you finance older vehicles? Yes, we went over that. I just don't suggest doing anything that's more than 9 years old or has a lot of wear and tear on it. Right, but you wouldn't want to finance, or you wouldn't want to buy a truck that's over 10 years old and has a lot of wear and tear on it, because you already know there's going to be breakdowns. Whereas if you buy a newer truck, it's going to be a lot less maintenance that you have to deal with, and it's going to be a lot more reliable, so you're going to have a lot less downtime. Now, let's talk about hiring drivers and prepaying insurance. Okay, prepaying insurance you want to do because you're going to get a discount, and then we discussed the competition for drivers today. All right, hiring a driver with a tiered bonus structure will allow you to bring on more drivers, and they're going to be better quality. You want better drivers because they're going to drive safer, they're going to be more reliable. Okay, I gave you an example in the slide, but if you can tier it of a third of the bonus when they sign on, a third for staying a year, and a third for staying 3 years with good performance and no safety issues. All right, this is going to help you attract the type of drivers that you want and that you can grow and scale with. All right, how can you hire more drivers or prepay insurance? You can either use a line of credit or alternative financing. Okay, both programs are going to give you the money that you need up front to grow and expand and allow you to pay back over time. Okay, these programs, we're going to be looking at your time in business, your cash flow, your credit, all things along that nature. Okay, if everything's good, we'll get you a line of credit. If something's a little weak, we'll have you work on it, and we'll get your alternative financing in the meantime. Okay, so let's talk about some of the benefits of a line of credit. These programs give companies ongoing access to funds for any use. So whether it's a truck repair, hiring new drivers, prepaying insurance, it's there. Okay, you don't have to use it all if you don't need it. If it's a $100,000 line of credit, you can tap into it 20, 30, 40, 50,000, or you can pull the whole thing at once and then pay it back over time. All right, this will give you the ability to hire drivers faster and repair trucks quicker, meaning your trucks aren't going to be down on off the road as frequently. And you know what? It's better to have a line of credit established before something happens and before a truck goes down rather than after, because underwriters will see a decline in revenue. Okay. These programs take anywhere from 24 to 72 hours to set up. And all that means is from the time you apply, it takes 24 to 72 hours to get the money into your account. Let's talk about what's needed to apply. It's pretty simple. It's a one-page application, the last 6 months of your business bank statements, a driver's license, a voided check, and either your articles of incorporation or your most recent business tax return. Now, let's talk a little bit about the qualifications for a line of credit. Okay, you have to be in business a year. You want to be doing at least $30,000 a month. You want a credit score or a FICO score of 650 or better, and you can't have more than 2 negative days in a month. The other thing they're going to be looking at is they want to see your average daily balances, meaning the money that you keep in the account at all times, above 1,500. If all those boxes are checked, we should be able to get your line of credit. If not, we'll work on alternative financing while we fix these problems. All right, now you'll see qualifications for the alternative financing programs a little bit different. You still have to be in business a year, but you only have to be doing $15,000 a month going into a business bank account. You have to have a credit score above 550, no more than 4 negative days in a month, and average daily balances above 1,000. Okay, and this is only for lines of credit and alternative financing. This doesn't have anything to do with invoice factoring. I just want you guys to know that in case you get confused. All right, so let's go over some frequently asked questions that we always get for lines of credit and alternative financing. How long are the programs? Programs are going to range anywhere from 6 to 18 months, both alternative financing and lines of credit. How are they structured? Okay, lines of credit have a simple interest rate and have either weekly or monthly payments. Alternative financing, they're either going to have small daily micropayments, meaning a Monday through Friday payment, or a weekly payment. What if you have bad credit? If you have bad credit, what I would suggest is after we get your alternative financing, you'll work on the credit with our credit repair team because they can build up your business and your personal credit, which will give you access to better programs in the future. All right, so what are the next steps? Okay, you can apply for any one of these programs by just emailing jfedera at Sprout Lending. Okay, again, JFODERA at Sprout Lending, or you can call 516-469-3279. Or you can set up a consultation. Just click this, leave a comment or a message, and we'll reach out. All right. I look forward to working with you. I look forward to helping you grow and scale your business. And again, any questions, feel free to reach out. Take care.